I'm Kate Moody, Strategy Director at LearnFS, and this is FinTech Insider News. This week, we're talking about Ember partners with HSBC to bring embedded finance tax solutions to UK businesses. Visa reveals a host of new products at their San Francisco Payments Forum. And are you a millionaire living in China? Maybe you should think twice before posting a selfie in your new Lamborghini. We discuss all of this and much more on today's show, so don't go anywhere.
This episode is brought to you by Shopify. Forget the frustration of picking commerce platforms when you switch your business to Shopify, the global commerce platform that supercharges your selling wherever you sell. With Shopify, you'll harness the same intuitive features, trusted apps, and powerful analytics used by the world's leading brands. Sign up today for your $1 per month trial period at shopify.com/tech, all lowercase. That's shopify.com/tech.
Hello and welcome to episode 860 of FinTech Insider. I'm Kate Moody, Customer Strategy Director here at LearnFS. I'm joined this week on FinTech Insider News by three guests who are here to break down the biggest stories from the past week in FinTech and financial services. First, I'm delighted to be joined by my co-host for today, Nadine Timmer-Bodenstein, Ventures Product Lead here at LearnFS. Welcome back to the show, Nadine. For people who haven't come across you before, what should I know about you and your day-to-day role at LearnFS? What do you get up to?
Yeah, hi, delighted to be back. So I'm a product lead in the ventures business, which means that I work with our clients on an array of different problems that they're trying to solve. So really helping them across the entire product lifecycle from ideation all the way through to delivery.
Awesome. Well, yeah, looking forward to getting your take on the news as always. Also delighted to welcome to the show for the FinTech Insider debut, Dan Hogan, co-founder and co-CEO of Ember. Big welcome to the show, Dan. You've got some exciting news, which we'll get into in a sec. But please, again, for our listeners who've not come across Ember before, what should they know about you and what you guys are focusing on?
Thanks so much for having me, Kate. Yeah, super excited to be here. I am Aussie, as you can probably tell from the accent. Chartered accountant for all my sins. And for the last 5 years, I've been running Ember alongside my co-founder, Aaron. And as both an accountant and business owner myself, I know how complex it can be to run a business. And our mission is essentially to simplify accounting and tax for small business owners and reduce the amount of time it actually takes them to stay compliant. So we've just made a recent move into the world of embedded as well, which is a little exciting update to come. So to help financial institutions help their end customers with this problem. So really excited to be here.
Yeah, spoiler alert. We'll get into that in a sec. But yeah, great to have you with us and looking forward to hearing about news in more detail. And finally, we have another FinTech Insider debut. Big welcome to JP Lips, CEO of DNA Payments. Great to have you on the show, JP. You joined DNA, I think, back in January, I believe. So again, how have you been settling in and what should people know about DNA and what you guys get up to?
Hi, Kate, and thanks for having me. I've been at DNA for 6 months now. Really enjoying it. DNA is a end-to-end omni-channel payments platform. So we help companies of all sizes accept payments in retail, food and beverage, hospitality, stadiums. And we are fintech, so we have a very modern payment stack, and that really is where most of the benefits that we provide comes from, because a lot of payment companies are hampered by the legacy of their systems. And there's a lot of acquirers in the market, but only a few are truly omni-channel, which is what we are, and very few can make it simple. So that's our mission.
Awesome. Well, yeah, again, another spoiler alert, quite a few payments related stories in the news this week. So very excited to pick your brains on those as we go through. With that, let's jump into the news. As always, a ton for us to cover. So our first story this week, it comes from TechCrunch, but lots of other places as well. And that is embedded finance is still trendy as accounting automation startup Ember partners with HSBC. British startup Ember has partnered with HSBC to offer embedded tax services. Ember helps small businesses and freelancers to manage transactions, expenses, invoices, and basic accounting directly from their online bank accounts. It also helps with estimating taxes, tracking financial data, and providing a self-serve product tailored for end business owners directly. Regulatory changes in the UK, such as the Making Tax Digital Initiative, will increase demand for accounting software in the near future. Ember's partnership with HSBC enables them to use HSBC's platform to attract clients, and HSBC is just the beginning as it aims to secure more bank partnerships in the future. Well, obviously, we've been joined by Dan, who's the co-founder and co-CEO. So probably would make sense to come to you first on this one. Exciting news on the partnership. Tell us a bit more about it and kind of, I suppose, how you've got to this point.
Yeah, for sure. It just means a huge amount to us because it has been our primary organizational focus over the past 18 months, I'd say, to get this proposition into market. And I'm just extremely pumped and proud of all involved for helping us get it through and get it live. And now we are super excited about this next phase of what it means for us. What it helps us achieve is to really help us along our journey of achieving our mission to liberate business owners from the burden of financial administration. And that now is amplified by us being able to work with such a big partner such as HSBC and help them help their businesses with their accounting and tax. So yeah, just really, really pumped.
And I suppose, again, just for listeners maybe who aren't small business owners, who kind of aren't in that world, what would this look like for an HSBC small business customer? Like, they go into their bank account, what can they now see and do that they wouldn't have been able to do previously?
For sure, yeah. So they essentially get free access to an accounting and tax software tool. So think of the likes of Xero, QuickBooks, the massive players in the market. HSBC are now offering a solution called My Business Finances, which is completely powered by Ember. And we essentially help those customers do things like get tax insights into how much corporation tax they need to pay into the future, how much self-assessment tax they need to pay as a small business owner, and things like sending invoices, getting an understanding of what their dividends available are to withdraw from a company. So really helping them across that gamut of different accounting and tax obligations that they have to do as a company, but also providing them those insights into their cash flow as well, which is a really key problem for a lot of these businesses. And now being able to do that at the scale of a big partner like HSBC.
And if I can jump in, Kate, if that's okay. And Dan, I imagine, we've done some work with, small business clients, or actually probably more accurately, banks hoping to serve their small business clients better. And I think one of the key insights that came up is, the existing tools out there like Xero, QuickBooks, etc., are incredibly comprehensive, but perhaps too comprehensive, and can almost be confusing for business owners who are kind of just looking for specific things. And at least when I was, Googling your company earlier, it seems like you're also really going to be helping that specific need, which is, I need help with this, but I want to keep it simple, but I also want the ability to bolt on additional services in the future. Is that correct, my interpretation of it?
Yeah, 100%. What sits at the core of what we do is simplification. So the likes of Xero, QuickBooks, and all of the bigger players in the space build accounting software for accountants. We build accounting software and tax software for small business owners, and we speak to them in their language. We don't use any complex accounting and tax terms. We try and break down that real complexity that exists within accounting and talks to them at their level in order to then be able to push them forward on their business, and really so that they don't have to worry about it anymore. Like, the average business owner across the UK spends around 15 hours a week on financial admin, which is mental to think. And they also then have to worry about pushing forward their business. They didn't start their business in order to do their accounting and tax. Businesses such as ourselves did, but they definitely didn't. So being able to really break down that sort of complex end-to-end accounting and tax journey has been something that has been super hard for us to do, but massively powerful for that end business owner to now be able to not have to worry about everything that they have to do alongside also run their business.
Yeah, absolutely.
I'd be really intrigued to get a bit more insight into this partnership with HSBC. How's it come about? Obviously at the surface, it looks like a sort of win-win situation, right? You guys get access to a bigger customer base, HSBC get to broaden their offering to their customers. But I'm guessing there's probably some slightly more complex trade-offs behind the scenes to it. So yeah, I'm sure we have lots of people that are either running fintech businesses or kind of considering them. How can you help them understand a bit more about what this journey to partnerships look like?
Yeah, absolutely. I'd be lying if I said it was easy. I think, so to take you back for when we first actually met HSBC, I was invited to an open banking conference out at HSBC back in September 2021. That was by a guy by the name of Alberto Caballero, who was one of the innovation leads out there. And we went to speak about the future of open banking and what power it held for the likes of HSBC in the accounting and tax space. It was something that they, at that time, hadn't really done much thinking in, because they saw it as obviously this huge legislation shift that put a lot of regulatory burden on themselves. But really, how could they then, I guess, turn it on its head and look at what opportunity it represented to them? So we went about talking through all of the things that we could offer to them and their customers at the end of the day. Things like getting them better insights into their customers to help them with their different product suites as well as at the end of the day, bringing that engagement back into the banking infrastructure. So I think a lot of what businesses do today is actually go into their bank, hook up their accounting and tax open banking link, and spend all of their time in the likes of Xero, QuickBooks, Sage, rather than in their bank. And so what we now provide the ability for HSBC to do is drive a lot of that engagement, bring back some of that mind share, and also try and have a bit of an influence on their NPS, because it allows us to look at providing those ancillary products to their businesses. That journey over the last 3 years has been definitely up and down. What I would say is it's just really important to get some, vital stakeholders within the business, and those vital stakeholders who are actually visionaries. I think we've been working with Governor William Turner and Temi Ofong, who's been amazing at really driving forward this agenda. I think to any other startup out there, you do need those key stakeholders internally who really believe in what you're trying to achieve, rather than those who are just trying to sort of push their own agendas. And I think that has been really what's pushed us through, because you do have times of adversity and you need a lot of resilience in order to push through those. And also bring your own standards up. So essentially, we have done so much work on being able to work with a bank like this, because their standards are so much higher than, say, working with any other kind of organization. So it has all of those different effects of actually improving our and security processes. And it's been an amazing journey so far.
No, absolutely. JP, keen to kind of get your perspective here. What's your take on this story? Which part of this partnership do you find most interesting?
Oh, I love embedded finance because it makes life so much easier for the customer, for merchants. And I think this is a great example. It's a win-win-win, providing convenience for small businesses, distribution for Ember, and a value-adding service for HSBC. And I think embedded finance is a real opportunity for big banks, but it's also a threat. Because fintechs can partner with banks, but they can also partner with independent software vendors. And therefore, I think banks really need to make sure they step up with these kind of services, because if you as a shop owner can get a loan approved very quickly through your point of sale system, that may be a lot easier than, for example, going to your bank. So it's a really fascinating space.
Yeah, absolutely. Nadine, would you agree with that assessment that banks kind of need to step up a bit in this space?
Yeah, 100%. I think, JP touched on some of the benefits or opportunities from embedded finance. I think they are vast. He kind of mentioned around convenience in the context of payments. I think that's a big one. And I know we'll get onto some stories later on. But if you think about, checkout processes for customers, they can become so much more faster with those integrated payment options. What does that mean for banks? What role do they continue to play there? Accessibility, I think, is another big benefit that is really important in the context of embedded finance. If you think about perhaps an e-commerce platform that's able to provide instant credit to its shoppers, just making that entire process not only more convenient, also more accessible to a range of different customers. Efficiencies, of course, there are massive efficiencies. Dan has touched on some of those already. I think, that stat around 15 hours of admin a week, my mind is still a little bit blown by that. Although I have a similar experience from research I was conducting earlier in the year with wealth managers or, client advisors. And I think theirs was even more horrific, which is something like 75% of their time is taken up with administrative tasks. So you can see the use cases across so many different customer segments. And yeah, I think banks need to, like JP mentioned, just think about how they either partner with, innovative startups like Ember to deliver these benefits directly to their customers, or perhaps how they want to do it themselves in-house. We're constantly speaking around, build by partner in the context of releasing new products and services to customers. So I think there are a range of approaches, and you have to do the one that works best for you.
Yeah, I think that's a really interesting thread to sort of go on, because I think the power of what we've been able to do with HSBC, if they had have tried to do this themselves, it would have taken a long time and a lot of money. And I think we've been able to really get them into market super quick because of how agile we are as a business. And although we are quite small, we are mighty, and we have really been able to push forward that in like a 12-month period versus the amount of time it would actually take for them to build this. I think it's just the way of the future is to partner and to go for this embedded route. And I think the likes of banks are really opening up to this. And we were initially invited to that open banking conference actually via one of their people actually searching on the open banking rails who integrates with HSBC.
Oh, no way.
It was quite funny. It was Alberto found Ember, and he was like, hold on a second. I have an Ember heated mug. They also are like an Ember heated mug company. And he made the link and he was like, that doesn't make sense. Why is a heated mug company doing embedded finance?
That would be niche.
Yeah.
Yeah, very niche.
And then so reached out to us, and that was how that sort of conversation started.
Amazing. Yeah. And I think, I echo your views there. I think we're seeing it a lot as well with our, big bank clients, where when we're having these conversations, they kind of more often than not point to the partner route for all of those benefits that you discussed. And actually, they can still derive the same benefits and improved outcomes from their customers by taking that approach. They don't have to incur the cost over a very long time period themselves. And and as JP also touched on earlier, they're often held back by their legacy infrastructure, and that's another conversation in itself.
Yeah, big time.
Yeah, I think we could take up the whole news show just talking about that. We have to move on to our next story. But yeah, congrats again on the deal, Dan, and really looking forward to seeing kind of how this rolls out and kind of, I suppose also what HSBC get up to next. So watch this space. Our next story comes from FinTech Futures, and that is Visa seeks to revolutionize the card with an array of new product launches. Announced at the Visa Payments Forum in San Francisco last week, Visa announced 5 new products. Firstly, Visa Flexible Credential, which allows users to switch between debit, credit, rewards points, and buy now, pay later, or BNPL, as some people like to shorten it to, options during transactions, launching in the US this summer via Affirm. Number 2, Tap to Everything, which enables NFC-enabled mobile devices to accept payments, transfer funds, and confirm identities securely when tapped. Number 3, Payments Passkey Service, using biometric technology for online payment authorization, which will integrate with Visa's Click to Pay service and new cards. Pay by Bank. This is already live in some markets, but is now expanding to the US to streamline account-to-account payments, enhanced by Visa Protect to mitigate fraud through AI and real-time payments networks. And lastly, Visa Data Tokens, giving consumers control over data sharing with merchants and financial institutions with the option to withdraw consent via banking apps. Well, a ton of potentially interesting new features, I suppose. JP, I guess you're probably spending most of your time in the world of payments, so I'll let you have first dibs on this one. What's your verdict? Is this super exciting or a bit disappointing, or somewhere in between?
No, listen, this is exciting. Technology and innovations is, for me, what makes payments so interesting. And there's a lot of innovation in Visa's announcement. It's good to remember that none of this is truly new or truly unique to Visa. All these things are already happening. But Visa can really help scale these applications, particularly because they do that through the traditional issuers and banks. So that, for me, is the most relevant element of this. The one that I am most enthusiastic about, the one I believe will have the biggest impact, is Payment Passkey Service, using biometrics to secure e-commerce payments. Because this could really help do for e-commerce what Chip and PIN did for point-of-sale payments, and really make them materially more secure.
Okay, yeah, I'm interested to dig into that one in a bit more detail. So again, I suppose from the customer perspective, how would that play out? Like, what would be the experience? What's kind of the new experience that this is potentially going to allow customers to have?
So it's basically the moment you do a payment, what Visa will do is they'll already tokenize your card. You've already tokenized your card. It's recognized by your device. And you authenticate yourself through, for example, facial recognition. And therefore, you've got the device, you've got the biometrics, you know exactly that you have the right customer in front of you. And that is, for example, that means that you don't have to do 3D secure. So you don't have to get a text sent to your phone and then enter the text, for example.
Okay, no, interesting. Nadine, which of this list are you most excited about and why?
Yeah, sure. I mean, before I get into that, the one thing I will just say, going back to what Dan was talking about earlier around, how we speak to customers, I was quite overwhelmed when I read this list. Lots of strange words. So that was my first takeaway. Visa flexible credential, tap to everything, payments passkey service, pay by bank. It felt a little overwhelming. So as a customer or a user, I did have to go and do some more research. I think for me, and this is definitely my own bias as a retail customer myself, and at the moment my project is focused on retail banking. I think the Visa flexible credential is really interesting. So this is the one that basically gives a customer the power to, at the point of sale, toggle between how they want to use their card, whether they want to use it as a debit card or a credit card, whether they want to pay over a number of months, buy now, pay later style. And I thought it was interesting in one of the articles I read to do some more research into this. Visa claimed that during a study that they did, more than half of card users indicated that they wanted the power to access multiple accounts through a single credential. And I think this was interesting because at the moment, the project that I am working on is very much focused on how we create solutions that enable customers to pay, transact, manage their money in a way that reflects their mental model. And obviously that is so unique across everyone. There's no one size fits all model. How I choose to use my credit card is going to differ how Dan chooses to use it, how Kate, how JP, etc. So I think that's really exciting. What I would say though is that I think the fact that, and this is my understanding, so payments experts, correct me if I'm wrong, my understanding is that you would still actually have to open your bank account, your banking app, and choose which way you want to pay through the app. So I think that does introduce some friction for the customer. That obviously means that, if you're in a little bit of a rush or in a little bit of a hurry, you might not actually have time to get your banking app out, do the biometrics, click on the card, change how you want to pay. So I think I'm interested to see in the future whether there's a way in which I just tap my card and after the fact, I can go into my banking app and say, my card was set to debit as a default. I actually want to change that transaction to be a buy now, pay later over 4, or I want to change it to a debit. And, that's something that we've at least seen in our research as well, where customers want that power to be able to, change later on how they've paid. JP, I think you maybe had some insight on that.
Yeah, and this is how, for example, what Amex has already introduced, where you can, after a transaction, you can effectively choose to make it buy now, pay later. My understanding of this is that it works in 2 ways. And I guess it's all down to how issuers implement this. But what I've read is you can configure the transaction. So if you say, well, every transaction above £100 I want on my credit card and below on my debit card, for example, then you don't have to go into your app every time. But if you want to do something specific, so you're going on a long journey and you want that particular payment to be buy now, pay later, then you go to your app beforehand and then you make your transaction later. That's my understanding of it.
Yeah, it's super interesting. I suppose, similar to Nadine, I'm just really interested to see how this starts to play out in actual payment journeys. Because I think what we've seen over the last few years in particular is just this move to make payments increasingly spontaneous, frictionless, embedding multiple different payment options super seamlessly at the point of checkout, so that you're just doing all of these things almost without thinking, sometimes to a worrying degree, or that's what I find personally anyway. So I think it's going to be a really interesting challenge as we see some of these new functionalities come in, which are trying or sort of relying to some degree on customers being able to anticipate or think about purchases in slightly different ways. And obviously we're seeing also interesting innovations in the sort of save now, buy later space as well. So I think it's just a super, I guess from a sort of fintech nerd perspective, just a really interesting time to sort of see what the next evolution of payments looks like.
Yeah, and it's also good to remember that this is not the only way in which this flexibility for customers can play out. Because at the moment already, if you pay with PayPal or you pay with Apple Wallet, you can already choose which card and product you use. So this is, I guess, Visa's way to put the issuing banks at the center of this journey. But it's not the only way it will play out.
Dan, what's your take on this? What are you guys going to be snapping up any of this functionality for your Ember roadmap anytime soon?
Yeah, I think it's really interesting to actually look at it from the business lens. So rather than the consumer, actually and the one that caught my eye the most was actually pay by bank, because a lot of business customers obviously issue their invoices, and that payment cycle is just such a broken cycle. It's like, how long does it take your customers to pay you? And it's because they're having to go through and transcribe your invoice details into their payment system or their banking software. And we've actually already looked at how we can sort of introduce payment links onto invoices. And obviously that's not a very new thing. That's been around for a while. But I think the whole ethos of actually moving into this pay by bank mentality is going to be really interesting to see how it plays out for improving debtor days and improving cash flow for businesses. So that one actually really caught my eye from the business perspective.
Yeah, absolutely. And I'm keen that this isn't just like a Visa love-in, right? Like, obviously it's exciting when anyone launches new products and new features, but we've also seen stories in the news this week about the payment system regulator in the UK getting, I suppose to put it nicely, a bit grumpy at Visa and MasterCard, saying that there's basically like no effective competition for the core scheme, for the processing services, and that they're actually really just sort of ramping up their fees, with people having very limited options, be it businesses in particular, and very limited options for alternatives. So, yeah, should we see some of these new product launches as a way for these to try and counterbalance this argument that they are creating new value, they are justifying some of these price increases, JP, or is it? Am I being overly cynical?
No, I think they are. For me, they're slightly unrelated. I think what Visa is doing here is effectively, protecting its place in the ecosystem. They don't just want to be a card player; they want to be a payments player, and that's why they embrace open banking. That's why they try to put the banks front and center in payment journeys. I think the PSR's comments were more around their relationship with merchant and merchant acquirers. And one of the things the PSR also said was that Visa and MasterCard provide complicated and unclear pricing statements to card acquirers. Now, being a card acquirer, I can definitely attest to that. They have daily charges, weekly, monthly, quarterly. They've got fixed, transaction-based, project-based. There's a whole industry of consultants and companies who help acquirers interpret those scheme fees. They're very difficult to predict, very difficult to assess how you allocate them to your customers. So anything that will help simplify that would definitely be much welcomed.
Yeah, that really doesn't sound fun at all. Nadine, if you were the CEO of MasterCard, I'm not going to rule it out for you as part of your kind of future career trajectory, but if you were the CEO of MasterCard right now, sat here looking at this announcement, would you be quaking in your boots?
I mean, I wish I knew what was going on in the CEO of MasterCard's head and what he has planned from a strategic priority perspective. But to be honest, I think it kind of builds on what JP just said. I think ultimately, these are examples of players in the market using innovation and technology to further cement their place in an ecosystem that is increasingly competitive, that has to increasingly serve more demanding customers, whether those are small business customers, retail customers, etc. So I'm sure, they're probably having similar thoughts around how do they defend, but also deliver more value whilst maintaining a relatively clean image to the public. So it's fascinating. I look forward to seeing what else comes out of this in the future.
Yeah, I would attest to that. And I think Visa did well to combine these 5 announcements in one press release to create an impactful communication moment. But I'd be very surprised if there's anything in there that MasterCard doesn't already have or is planning to do. And in fact, their interests are very much aligned. They're very similar businesses, and they're both basically protecting their position.
Yeah, absolutely. Okay, well, let's see how these ones play out. And on that note, we're just going to take a very quick pause. We'll be back shortly. The time for community banks and credit unions to win is now. While the big players and exciting new challenges grab headlines, regional institutions are at the heart of the banking ecosystem, putting the service back into financial services. Serving their local communities, these organisations around the world have a unique advantage over their competitors. They have deep, established roots with their customers. They offer a local personal service and they're not tangled up in the legacy tech mess that the big banks are. To read, watch and listen to what else we've got to say about them and how they can win, visit 11fs.com/communitybanks. That's 11fs.com/communitybanks.
We are super excited to announce that 11FS will be at next month's Money 2020 Europe event over in Amsterdam. We have loads of cool things lined up, including a couple of podcasts and even a run club for those who really want to burn off all of those stroopwafels. You could also swing by Stand K08, where our 11FS Pulse team will be showing everyone what best-in-class UX looks like with our industry-leading product catalogue from every corner of financial services. They'll be hosting live demos throughout the event, so be sure to swing by and say hey. See you in Amsterdam.
Welcome back. Before we get into the second half of the news today, a note to go check out our most recent FinTech Insider Insights show. David Barton-Grimley, FinTech Strategy Director at 11FS, is joined by some brilliant guests to check in on the current state of FinTech across Latin America. As Nubank hit a whopping 100 million users, we take a look at how this market has grown, evolved and changed in 2 years since our last in-depth look at the region. To do so, David was joined by experts from Uno, Vexi and Novo Payment. So go check it out in our podcast feed. It's the one just below this. Okay, let's move on to our next story. Again, this one's taken from Bloomberg, but again, mentioned in lots of places. And this is Stripe opens City of London office to step up UK expansion. Stripe has launched new payment tools and financing options in the UK to support the growth of small businesses. Stripe Capital provides flexible financing options using transaction history to qualify businesses and offering quick payouts as earnings come in. The new Pay by Bank, remember that one, method offers real-time, low-cost payments directly from bank accounts, helping businesses save on payment fees and improve cash flow. Stripe has introduced faster payouts using the UK's faster payment scheme, reducing the time for businesses to receive earnings from 2 days to a couple of hours. Alongside these product launches, Stripe is opening a new flagship London office to support its expansion. For more on this news, we spoke to Stripe's EMEA product lead, Ruhi Dang. Let's hear from her now.
We're seeing lots of positive growth signals from our UK user base, but access to capital is still a rate limiter for the economy. So this week at Stripe Tour London, we launched a couple of new payment methods and financing tools to address exactly that. The first one is our business financing product, Stripe Capital. Only 50% of bank loan applications by UK small businesses were successful last year, which was down from 80% in 2018. But if these small firms can't access funds to invest in things like new equipment or marketing or bigger teams, they can't really grow. And Stripe Capital aims to plug this gap. We use a company's payment history on Stripe to proactively qualify businesses for financing and make an offer directly in their Stripe dashboard. Capital is now available to UK businesses on Stripe, and later this year, platforms that use Stripe Connect will also be able to offer financing to their own users. On top of that, we launched a couple of new payment tools that will help companies of all sizes get their earnings faster and at lower costs. Pay by Bank is Stripe's first payment method built on open banking infrastructure. Businesses that sell high-value goods and services could save tens of thousands of pounds in payment fees every month by using Pay by Bank. And we've also launched faster manual payouts, which cuts the time it takes for a business to get their earnings from 2 days to just a couple of hours. This is free, and it'll really help large and small businesses to manage their cash flows. So yeah, we're seeing lots of opportunity to accelerate growth for our UK users, and we're very excited to keep building and expanding here.
Yeah, Dan, I'll come to you on this one first, because I guess lots of things that they're chatting about overlap with some of the issues you flagged when we were chatting through the previous story. How exciting is this sort of expansion of Stripe in the UK from the perspective maybe some of the businesses that you guys work with day in, day out?
Yeah, definitely. I think it's a really interesting play from Stripe, given that they obviously invested in TrueLayer the last few years. And really driving forward that kind of open banking agenda. And we actually use TrueLayer ourselves within Ember to really hook into our businesses' bank accounts. And seeing the application of this to actually help businesses improve their cash flows, obviously from a lending point of view, but I think where we look at it from is open banking really empowers end business owners to get a better handle on their cash flows. And I think it's all really about the information landscape that now Stripe has in order to make those powerful decisions. And it's a really interesting future, because it's also very timely, obviously, with our partnership with HSBC, because a lot of what we've been talking about with them is how can we help them understand their customers better. We obviously produce a profit and loss, we produce a balance sheet, we understand revenue velocity and all of these different things that businesses have within their accounting and tax software. And the fact that they haven't been sort of lent to over these past few years, I think speaks to a lot of the economic uncertainty happening and stricter criteria and regulation changes. But if we can actually help these financial institutions be empowered with the information in order to make these lending decisions quicker and more accurately to businesses that actually need it, I think it's an amazing thing for the economy.
Yeah, and just to jump in on that, one of the other product leads here at 11FS, Rachel, she's also a regular on the podcast. She was actually at the Stripe conference on Tuesday, and I had a quick chat with her about this ahead of the podcast, given the story focus on Stripe. And I think going back to that stat, which was pretty crazy, around only 50% of loan applications from small businesses being successful last year. Rachel shared that one of the stats that was shared at the conference was that when asking, small businesses around their, appetite for alternative financing options, over a third of SMEs said that they would get financing through fintechs. So I think this really does also highlight that there is such a rising demand for non-traditional financing, given the challenges these businesses have faced. I mean, you touched on some of them around, the economic factors. I think a lot of small businesses are still feeling the effects of, COVID, other key market events that have happened. Those types of events probably resulted in a decline in revenues and profitability, which then would impact, the criteria that banks traditionally use. I think also, given the economic environment and uncertainty, they would have tightened their own criteria for, their different loan applications. So it's almost, I think, a bit of a vicious circle where small businesses have been struggling financially. They need access to capital to perhaps get them back on their feet, help them with their expansion plans. Banks have also, although, much larger and more profitable, have felt the effects have resulted in them, making these changes to criteria. And now we're seeing such a rise in appetite for alternative ways in which small businesses can get that financing.
Yeah, absolutely. And I think it speaks a lot to also helping businesses, I think, even pay their taxes, and get to the point where they can stand on their own 2 feet. We were going to talk about earlier around sort of the Making Tax Digital front, and the digitization of tax is actually moving the entire economy into trying to help HMRC reduce the tax gap that exists currently in the UK, which is around about £40 billion a year. So to think about that, that is actually lost in businesses failing or misfiling or not being able to sort of pay their taxes at the end of the day. There's just such a huge economy sink at the end of the day from a taxes perspective, and being able to maybe help those businesses stay around for a little bit longer is such an amazing thing that I really believe that the power of this information can hold.
Yeah, super interesting. I think on multiple fronts. I suppose the point you're making, Nadine, about the opportunities of lending to these businesses, I think it's been really interesting over the last few years to see how the conversation in big banks, I think, has shifted slightly. I think maybe a couple of years ago, maybe big banks would have looked at some of these fintech lenders and not been too worried, because they probably would have said, well, they're lending to the companies that we don't want to lend to anyway. They're taking risks that just don't align with our internal risk appetite. It's fine. We'll let them take the hit. Probably half the loans will be dodgy anyway. It's no big deal. Whereas now, I think when we're starting to see players like Stripe move into this space, then it becomes a lot more concerning, because I suppose the point you're making, Dan, earlier, this isn't just about the loan, it's about the broader relationship, it's about the engagement. And when we speak to businesses, actually what we see is that there are very few moments in the retail banking space, in the business banking space, probably in the institutional banking space as well, right, when people actually are actively open to a new relationship, a new partnership, and needing a line of credit is one of those moments when, as Nadine says, you do become open to new options purely out of necessity often. But that could become the starting point for you moving other parts of your personal finances or your business finances as well. So yeah, I think that the conversation or the pattern I'm hearing now in bigger banks is less sort of like, oh, we're not too worried about fintech lenders, and more like, oh, we should be trying to really lend to these businesses ourselves. What can we do to make that possible? So I think that's what I find interesting.
Yeah, I totally agree. And what you also see is that banks have partially moved away from merchant acquiring, or they're not as dominant as they used to be. And payments businesses have a really good gauge on the health of their customers because the payments go through them. And one of the things we found in our capital offering to our small, medium-sized enterprise customers is really important to make sure they have a good customer experience. So we don't have our own product, but we've partnered, and we pre-approve customers. So we only promote it to ones who are eligible. And then it's a really smooth process, and it doesn't end up in any disappointment.
Yeah, no, I think that's really, really key. And I guess the other thing I'd be keen to pick your brains on, JP, is obviously one read on this story also is seeing it as a vote of confidence in the UK fintech scene. Obviously, Stripe choosing to invest further in this market. How do you find that? Do you still see the UK as offering kind of the right environment for ambitious fintechs and other growing businesses?
Yeah, absolutely. And there were some statistics about foreign direct investment where the UK actually has increased its share compared to other European countries. I mean, this remains a place where the education and workforce, the investment climate, the regulation, transport, even the language, everything makes it a really good place to start and build and grow a business.
Apart from like the weather climate, which remains atrocious. So that's...
Yeah, but as you may have heard, I'm originally Dutch, so it's not much better there.
Okay, well, I'm going to move us on to our next story, moving beyond UK shores. This story comes from FinTech Futures, and that is Bank Muamalat signs a long-term partnership with Backbase for engagement banking platform. Bank Muamalat in Malaysia has partnered with Dutch, there we go, JP, digital banking solutions provider Backbase to launch a digital Islamic banking super app for retail customers. The super app, powered by Mambu's core banking platform and Backbase's engagement banking platform, will offer onboarding, transaction processing, financing, and consumer servicing and engagement. This app is a key part of Bank Muamalat's digital transformation, aiming to provide personalized banking experiences tailored to customer preferences. The goal is to launch by the end of this year. I don't know if anyone would consider themselves an expert in the Malaysian banking scene and has a sort of proactive opinion on this. If not, I'm just going to pick on you, Nadine. Nadine, what's your take on this story?
I'm not an expert in the Malaysian banking scene. My colleague Rachel, who I mentioned earlier, she did actually record a FinTech Insights episode last week or the week before, focused on Islamic banking, and I think I'm definitely no expert on that, but I think that's really interesting when you specifically dig into the challenges that may, or the challenges of Islamic banking and how you actually serve customers correctly in that space. I think often actually we think that there are challenges in serving customers, and we think that actually the customer base is where the challenge lies. But I think that is probably one of the fundamental pieces of misinformation that there is. And really the challenge lies in creating those products that are Sharia compliant. For those perhaps listening to the podcast who don't know too much about this, and I also didn't, and so I had to educate myself. Basically, the kind of core principle of Islamic finance is that it forbids the payment or receipt of interest. So the implication for banks is that this means that they have to therefore think about how they develop products that are interest-free, whether that's on a profit sharing or, a lease model basis. And the other key point, I suppose, around Islamic finance is that it requires transactions to be backed by tangible assets or services. So really prohibiting anything that's speculative. So I think it was really interesting for me to read this article, to dig into the details on Islamic finance in a bit more detail and really understand actually where does the complexity lie, and how do we, as people in the Western world, begin to think around how we do serve these customers who have a very specific need for products that, quite frankly, they're not being able to get through a large number of banks currently.
Yeah, no, I think we recently polled some of our listeners. I think 40% said that they were knowledgeable on what Islamic finance is. So it definitely feels like there's a real opportunity there to kind of help people understand this space more broadly, and both some of the challenges and potential opportunities as well. JP, what did you think of this story? Which part of this new proposition would you be most excited to find out more about?
So I was most attracted to the super app reference. I mean, super apps are just incredibly fascinating. And we all know the big Asian super apps, and therefore in the West, everybody wants to create one, because who wouldn't want an app where all customers do everything that they need to do? Yet, of course, it's really difficult because there's already so many ingrained and well-working applications out there. But it's still really interesting to think, okay, who would be able to do it? And for what it's worth, my view would be that I think more themed super apps would have an opportunity here in the West. So whether it be around travel or food or other. So it's going to be really interesting to see who can really make them happen.
Yeah, as I was reading this story, I was trying to work out where the super part was. And I don't know if I was reading it maybe I was reading it before I'd had my lunch, and so I was just a bit grumpy. But I couldn't necessarily instantly see where the super part was. I mean, they talk about going beyond traditional banking services, offering holistic life empowerment features from financial faith and the added assurance of security and peace of mind in every transaction. But yeah, it all seems quite vague to me at the moment. I suppose I share both your interest, JP, but also potentially a bit of skepticism about the feasibility of people just to kind of decide they're going to be a super app and off you go. I think typically where you've seen super apps emerge, they often haven't actually even necessarily started in financial services. They've started in another space and then added financial services in, so the likes of WeChat and Grab and in other parts of Asia, etc. So yeah, I'm intrigued to find out more. They've said explicitly that it's not just going to be, you're going to start in retail, but also go out into commercial and SME banking. So I don't know if that's what they mean, that it's going to be a sort of, I don't know, one bank to serve them all type super app, but that's a little bit too Lord of the Rings for me.
I think there could be another explanation, which is that it's just a really attractive buzzword, super apps. And on that topic, and I'll take us back to the Visa discussion we had earlier, because Visa in their press release also had a product called Visa Data Tokens. And I think we all know that no announcement is made nowadays without many mentions of AI. Visa had 8 AI mentions in their press release. And I just want to read out 2 sentences that I really enjoyed. So Visa issues a private data token to the merchant, complete with, there we go, AI-generated insights based upon the customer's transaction data. The data token can be used with the merchant's AI models to deliver real-time recommendations for the shopper. So this is AI talking to AI. I mean, whatever could go wrong.
Yeah, I keep saying that we need to introduce a drinking game for these recordings now, where every time AI gets mentioned, we all do a shot or something. But I'm not sure that would enhance the output for the listeners. But no, I do agree. It's definitely a buzzword. Dan, is Ember going to become a super app? Are you already there? Have you already nailed it?
I think we've got a long way to go. But it is really interesting to think about that in the context maybe more so of the UK and across Europe. And when I think super app, you kind of think about the likes of Revolut and some of the other more progressive neobanks/fintechs moving into that realm of actually offering everything adjacent to financial services. If you look at Revolut and you think about their travel buy up and what they're doing with sort of the travel economy across Europe is really interesting to see. And they obviously have such a huge reach and such a massive expanse of product offerings that they also give to their clients. And this is obviously looking at it more so from the business lens, but they actually do themselves offer some tax insights into their products and to their businesses. And it's really, I guess, what you define as a super app is where the gray area definitely is. But I thought like the other part of this that I found quite interesting is looking at how they have taken that kind of diverse need of a customer into account. And we've had to do that a lot with how we've built the product from a usability perspective. And there are just so many different customer needs that you need to think about when you're building products. And this just really goes to show that is just at the core of what they're obviously doing and what should be at the core of what a lot of other businesses are doing who are building apps.
Yeah, I mean, one of the first recordings I actually did for this podcast, we spoke about Revolut, and it was after they had made an announcement around some of their new product launches, and we spoke about them in the context of a super app. And I think for me, something that's really interesting, going back to some of JP's comments on the Asian market, is that, you know, the Asian market is quite different to what we have here in the West. And specifically when you think about the fragmentation of the market and the competition that already exists, you know, if you think of e-commerce, you think of Amazon. If you think of ride sharing, maybe you think of Uber. So, you know, we have already really established businesses serving customer needs very effectively in their specific domain. And so I personally hold some reservations as to whether actually a super app will succeed in Europe. I mean, I was in Uber the other day and I can't remember what, but I even remember being quite intrigued by the number of new features that were available to me. And it started making me think as well, okay, they're trying to get me to do this through them and this through them and this through them. But personally, I just never would, because whatever they were surfacing to me, I already had a different app that I could do that on. And I probably wouldn't start using Uber to do that.
Yeah, so true. And I think, sorry to use the term again, but as AI continues to develop, and depending on what shape that takes from, say, an agent perspective, are we going to sort of fall into this world of just asking our phones to do something for us? After you look at the sort of most recent release of for Omni, and I guess you don't necessarily need a single app to do everything.
Yeah.
Because now you can just tell AI to ride you or order you a ride share from Uber, or
Exactly.
order you from Uber Eats, or whatever it is that you're trying to do.
Yeah.
There'll be this kind of layer that just sits on top of your entire...
And to be honest, I think I probably think of my phone as a super app. You know, my phone has all the apps that I need to perform the functions that I want to do. I have them grouped nicely into their little folders for the different things that I need them to do. So in a way, going back to the whole mental model, you know, phones allow you to organize your life in a way that you want to, use the apps that you want to use to perform those functions. And of course, I'm sure there are people who want to be able to do all of that in one. I'm just quite intrigued to see how that actually plays out in the European market.
Phones plus spreadsheets. You'll never kill the spreadsheet. That's all we hear time and time again. Anyway, I'm going to have to move us on to our next story. But I suppose to Nadine's point, top of the story, if you're interested in learning a bit more about Islamic finance, then you can check out episode 856 on our podcast feed, where we discuss how Islamic finance can serve Western markets. Lots of really interesting potential use cases and opportunities there. So go check it out if you'd like to learn a bit more. Okay, now for a quick look at some more click-worthy news this week that we don't have time to cover in full. Our first one comes from FinTech Futures, and that is JP Morgan Chase commits £40 million more to boost economic growth in the United Kingdom. JP Morgan Chase is committing an additional £40 million over 5 years to drive sustainable economic growth in the UK, focusing on improving job opportunities and financial health for underserved communities. The investment aims to enhance skills-based hiring, support fintech development for financial management tools, and partner with the UK government and British Business Bank to strengthen the small business ecosystem. For more on this story, we spoke to Martin Hyde, Head of Partnerships for EMEA, JP Morgan Payments, to tell us more.
We're excited to have announced a new business and philanthropic commitment in the UK. £40 million in new investments to help connect young people and underserved communities to economic opportunities. With this announcement, we're showing our continued commitment to the UK, a place where we have a long-standing history of over 200 years of doing business. We also remain a major employer of more than 22,000 people in cities including London, Bournemouth, Glasgow, and Edinburgh. This is our latest commitment to the UK, but investing in local communities is not new to our firm. We have learned from our work in cities like Detroit and Paris about how to connect our own resources and capabilities as a firm with our philanthropic investments. We're now applying these learnings and aligning them to the government's priorities around sustainable economic growth. With this latest investment, we are focusing on two main areas. Firstly, improving access to job opportunities, and secondly, helping families build stronger financial futures. As a firm, we aim to reduce barriers to entry-level positions and improve access to quality careers. Our payments business plans to launch an accelerator program to support fintech founders focused on developing solutions that help improve financial health. By using these unique solutions, UK residents and businesses can be better equipped to manage their day-to-day finances and plan for the future. For low-income groups especially, the program will help accelerate the development of sustainable financial management solutions, including providing access to growth funding for fintech founders that might have otherwise had difficulty securing additional capital.
Interesting. Obviously I'm not going to comment on this one at length, given that Martin's already given us a good run through. But I think if we were having a round of drinking games for fintech insider, then financial health would probably also get added to the list alongside AI. But if they're actually genuinely going to invest in or provide capital to companies that are trying to challenge the problems in this space but struggling to get funding, then I'm all in favour of that. Nadine, do you want to run through our next story?
Yeah, sure. Our next story is from FinTech Global, and it is that the FCA finalises sustainability disclosure rules to tackle greenwashing. The FCA has released the final rules under the Sustainability Disclosure Requirements, SDR, to provide consumers with reliable information on sustainable investments and prevent greenwashing. The rules want to ensure product names and marketing accurately reflect sustainability characteristics. Firms must comply with 3 categories of disclosures: consumer-facing, pre-contractual, and annual sustainability reports, with clear explanations for any sustainability labels used. For me, this was definitely a welcome news article to read. I did some research myself, and the stats that I found were that roughly 1 in 4 of all investors owns at least one sustainable fund. However, it's still kind of an area full of confusion, skepticism, suspicion, people not really understanding actually, why is this fund sustainable? Why does it get that kind of term? I think we also saw during lockdown, interest peaked massively for these type of products. But with that increased interest came more of this skepticism around, well, actually, am I investing in something that's green and doing what I think it's doing? And I think lots of people had an experience where perhaps they looked at the fund fact sheet, that's, the fund fact sheet of a sustainable fund. Maybe they see a holding in the top 10, which perhaps isn't sustainable by their standards, and just feel quite disappointed by it. So yeah, I think these rules are very welcome. And like the story said, in addition to the actual new rules, the regulator is introducing 4 sustainable labels from the end of July. So those are sustainable impact, sustainability mixed goals, sustainability focus, and sustainability improvers. And you'll be able to find much more information online as to what each of these labels mean. But effectively, the purpose of it is to make it much, much easier for consumers to understand how sustainable their fund is based on these different labels.
Yeah, absolutely. Okay, now it's time for the And Finally section of the show, a look at something a little different from the world of finance. Taking this story from The Guardian, that is, Chinese social media companies remove posts showing off wealth and worshipping money. Chinese social media platforms are cracking down on posts flaunting wealth, targeting luxury cars, expensive properties, and content that brags about financial freedom. Weibo, Tencent, and others have removed thousands of posts and accounts to promote positive, civilized content and support the government's Common Prosperity campaign. This is part of a broader effort to purify the internet cultural environment amid a growing income gap. Nadine, if social media isn't for showing off, then what is it for?
My social media is for funny memes that I share with my family, cooking videos, garden inspiration. So I can't necessarily say that the type of posts that they are taking down would actually impact me. However, I think it probably raises a wider concern around general censorship. And, one of the main points of social media is that you are able to share what you want, see what you want, and perhaps for some people in this context, even create a bit of a virtual life that you want to aspire to that you might not have at the moment. So yeah, I think for me, quite sad overall that this is happening, but Not sure how other people think.
JP, does your social media profile show your many luxury cars?
No, it doesn't. No, to be honest, I do find it irritating when people, mostly when people always only, post really positive and kind of happy. Look at me at this beach. Look at me here. Look at how well it's going. There's often there's no kind of reality to it. I mean, they're not going to post often when they've had a bad day, or so that does irritate me. For me, social media are mostly around staying in touch with people, and that's partially because I've moved to a different country. What really struck me in here, and of course it's it's scary what the Chinese do in terms of censorship, but also the differences, for example, in how TikTok works in China and outside of China. In China, if you're under 14, it's all about science. It's about museum exhibits, educational videos, etc. Whereas China is more than happy to kind of corrupt our youth here in the West with algorithms. There's one social media analyst compares it to opium versus spinach. And I think that to me is the big takeout. I think this is China's way to undermine its adversaries.
I don't think I'd like either spinach or opium, to be honest. So I probably need to sit somewhere different. Dan, what about you?
Yeah, I think my only contact with social media these days is actually LinkedIn, because I did get rid of all my other social media accounts because of the time it takes away from actually focusing on what you need to be doing. But I think I saw a pretty hilarious post the other day on LinkedIn, and this kind of just speaks to maybe where we've gotten to within our own society. It was, I proposed to my girlfriend the other week, and this is what it told me about B2B SaaS. And it's just like, oh, come on. It's hilarious. I think it was actually maybe on one of those spoof accounts. But I think this particular story obviously talks to that kind of censorship. And I've just also finished reading the Elon Musk book around sort of Twitter and the insights that he has there. And it's just, I think social media is a world of pain at the moment, and we definitely, as a society, need a different answer to how we actually connect with individuals, because we have really lost that sense of community, and it is obviously just all about what luxury cars you're driving around in or expensive properties you're buying, and we've really lost touch with the human race, really.
Yeah, and I think just building on that and some of JP's points as well, I do still use Instagram. I'm not quite at Dan's level of self-actualization yet, hopefully one day. But for me, it's even been quite interesting to look at the progression of, the few influencers I follow, let's say, where perhaps at the beginning they did start out much more around promoting products, because that's obviously how they make their money, and being slightly more materialistic. And JP, to your point, everything's positive, everything's amazing. I go on these wonderful beach holidays and my life looks fantastic. But I think even they are realizing that the way that they need to communicate with their customers, which are, the people on Instagram watching their videos or TikTok, has had to change, because people are beginning to feel their, how they see these things being impacted, and they don't just want to have positivity and products and all of this pushed at them all the time. They want it to be more real and more human. And I think that kind of speaks to your point around people still seeking connection through digital means. We obviously want to try and promote more of the face-to-face human interaction, but at least we're seeing that, I think, in my opinion, positive progression to try and be a bit more realistic and address important topics through, these platforms that they have and their customer base.
I guess I always apply a jobs to be done lens to most of the things I do in my life, but I also think that I personally find social media really helpful to just remember when I did things. Like, I find it really difficult. I'm getting increasingly senile now, and if I try and remember what happened when, just from like my own head, I really struggle. But actually, if you scroll back through, your Instagram, you go, oh no, I went on that holiday in April of this year. And actually it's quite helpful. Sometimes if you have to fill in like ridiculous forms for things where you have to state, which addresses did you live in at, for which amount of time. I can't remember those things off the top of my head. I need some sort of aid memoir. And that's sort of what Instagram / Facebook. I've not had to go back to MySpace yet. Like I am that old that, but like that would be properly trawling through the skeletons. But yeah, I think it's got that practical purpose for me as well, at least.
Are any of you on Be Real?
No.
No, actually, no.
Because Be Real is really good for that, because you take a picture every day. So you can literally go back and you can say, okay, you can even see how you felt on the day, if you use it real and not kind of save it for the happy moment in the day.
Oh, I've got an app. I've got an app called 1 Second Every Day, which I used for my son when he was born, where again, it's that same concept that, you take a little bit of video every day. And I did it every single day for like the first year. And then it's fallen apart. So now it just reminds me what a terrible parent I am and how I've stopped keeping up with things. Anyhow, we've gone wildly off track. So I think probably we should wrap things up for today. Thank you so much to today's guest. Where can people find out a bit more about you, Dan?
Yeah, so if you want to head over to embedded.ember.co, we would love to speak to any financial institutions who are looking to help their businesses through making tax digital changes that are obviously coming up on the horizon. It really is, the biggest reason in which we are looking at this embedded strategy for the future, because we want to be able to help those banks help their customers. So head over to embedded.ember.co.
Awesome. JP?
Yeah, we've got a website, dnapayments.com, but also feel free to reach out to me on LinkedIn, JP Lips.
Brilliant. And Nadine?
Yeah, feel free to connect with me on LinkedIn, Nadine Timmer Bodenstein.
Fantastic. And as for me, you can find me on LinkedIn as well, Kate Moody, or drop me an email, kate@learnfirst.com. Thank you very much for listening. If you like what you've heard, please follow our podcast and don't forget to leave us a review. It helps us make a better show and helps others to find us. As always, if you want to join the conversation, find us on social media. Just search for 11FS or FinTech Insider or email podcast@learnfirst.com. Thank you very much. Goodbye.
Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak, so sometimes you just need a quick human rundown of the biggest stories. Well, you are in luck. Bite-Sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-Size goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters.
We are super excited to announce that 11FS will be at next month's Money 2020 Europe event over in Amsterdam. We have loads of cool things lined up, including a couple of podcasts and even a run club for those who really want to burn off all of those stroopwafels. You could also swing by Stand K08, where our 11FS Pulse team will be showing everyone what best-in-class UX looks like, with our industry-leading product catalogue from every corner of financial services. They'll be hosting live demos throughout the event, so be sure to swing by and say hey. See you in Amsterdam.